If you think overtime is tax-free, pause right there because you're about to be very disappointed. Right now, millions of people are hearing no tax on overtime and thinking they're keeping 100% of that money. They're not. And if you stay with me for the next few minutes, I'm going to show you exactly what's actually happening to your paycheck and how much you're really keeping. Quick filter. This is not for someone trying to figure out how to avoid taxes completely. This is for two types of people. If you're working overtime and you want to understand what is actually happening to your paycheck, this is for you. And if you're a business owner with a team working long hours and you want to understand what your employees are hearing and what needs to be set up correctly, this is for you too. My name is Mia Reeves, CPA. I work with business owners every day. So when I tell you this is being misunderstood, I'm not guessing. I'm seeing it play out in real numbers. Let's get to it. This headline is everywhere. News, TikTok, group chats. You've probably heard someone say, wait, does this mean overtime is tax-free now? No, Uncle Sam is still at the table. He didn't leave. He just takes a slightly smaller bite. And that difference is what this entire video is about. Let's make this simple. Picture your paycheck like a pizza. Every hour you worked earns you one slice. But before you even touch your slice, Uncle Sam walks in, pulls up a chair, and takes a bite. He doesn't ask, he doesn't wait, he just eats. That's federal tax, Social Security, Medicare, every single time. Now, overtime, once you go past 40 hours, you're not just getting another slice. You're getting a bigger slice, more cheese, more topping. That is your time and a half pay. And here's what people think is happening. They think Uncle Sam looks at that bigger size and says, you know what? This is yours. That is not what happens. He's still at the table, still eating, but now he takes a smaller bite from that extra size. And this is where most everyone gets it wrong. Let's break it down with real numbers. Let's say you make $30 an hour. Overtime, it's $45 an hour. That extra $15 is the only part getting special treatment. Let's say you work 10 hours of overtime a week. That's $150 a week times 50 weeks a year, about $7,500 a year. And now this is where people get excited. They hear $7,500 and think that's how much I'm saving in taxes. No, that's $7,500 does not come off your tax bill, meaning you're not paying $7,500 less in taxes. Instead, it comes off your taxable income. Let me explain this further. If someone's in the 22% federal tax bracket, which is common for someone earning $50,000 to $100,000, that's $7,500 times 22% equals about $1,650 in real tax savings. That's it. That's still real money that can cover a car payment, braces for the kids, but it's not $7,500 in savings, and it's definitely not zero taxes on overtime. Now here's the part most people miss. There are limits. There's a $12,500 cap per year for single filers, $25,000 cap per year for married filing jointly, and it begins to phase out at higher income levels starting around $150,000 for single filers. So higher earners like project managers, senior leads earning $160,000 may not receive the full benefits. Details may involve depending on how this is finalized. And one more thing, this deduction expires in 2028. It's temporary, not permanent. So the window is open right now, but it won't be open forever. Now, if you're a business owner, this is where it gets serious. Your employees are hearing no tax on overtime and thinking they're getting the whole pizza. If your systems are not set up correctly, they might not even get an extra slice. And there are three things you need to get right. First, classification. This only applies to non-exempt employees. A lot of business owners think that putting someone on salary automatically makes them exempt from overtime. That's not how it works. The classification depends on what they actually do, their duties, decision-making authority, and how they're paid, not their title or their salary. So you've got someone classified as exempt who should be non-exempt. You've got problems. They might be owed back overtime pay. I've seen that cost business owners $40,000 to $150,000 in back wages alone. And second, payroll and time tracking. If you're not clearly separating regular slices from overtime slices, there's no way to show what part qualifies for the deduction. And if it is not documented, it does not exist. So your payroll system needs to clearly show regular pay versus overtime pay. And your time tracking needs to be accurate every single week. Third, communication. Your employees have to claim this themselves. If no one explains it to them, they're sitting at the table expecting more overtime tax benefits benefits and not understanding why they did not get it. And that is how trust breaks, even when you did nothing wrong. But this is also your opportunity to explain this rule clearly and build trust with your team if you do this right. Before we wrap up, let me clear up a few myths. All overtime is not tax-free. Uncle Sam is still taking a bite. This does not automatically save thousands. It depends on income and hours worked. This is not permanent either. The rule can expire in 2028. And working more overtime just to get a tax break does not make financial sense. You're not getting free pizza. You're just losing slightly less of it. Last, if you're a business owner thinking you can restructure your pay to create overtime for yourself, that is not how this works. This applies to qualified overtime paid to non-exempt employees. Owners typically don't fall into that category, and the benefit is capped and structured in a way that can't be engineered around. If you actually want to learn how taxes work, instead of trying to bend the rules around something like this, watch the next video. I'm breaking down the top 5 tax strategies business owners are getting wrong right now so you can avoid costly mistakes. One more thing for the business owners watching this, overtime is not just a tax topic. It's a margin issue. If your pricing is based on a 40-hour week, but your team is working 50, that extra cost is coming out of your profit. That is like giving out extra slices all week without charging for them. And over time, that adds up fast. So review your numbers, look at your overtime, and make sure your pricing actually reflects the true cost. Now let's bring this all together. The headline says, no tax on overtime. The reality is Uncle Sam is still at the table, still taking his share. He just takes a smaller bite. There's a real benefit here, but only if it's understood and set up correctly. If you're working overtime, now you know what to expect. If you're a business owner, this is your opportunity to lead. Set it up correctly, communicate clearly, and make sure everyone gets their fair share. If you're an employee working overtime, comment paycheck, and I'll show you how to estimate your real tax savings. If you're a business owner, comment team, and I'll show you what we check first to make sure your people qualify. And tell me this, did you think overtime was tax-free before this? Because most people do. If this helps, follow along. I'll see you in the next one where I break down how the current economic environment and global risk can impact your business and what you need to be doing about it.